So we're going to start off by using the weekly time frame. And what we're going to do is mark out our weekly liquidity. So all the major swing points. We have a level here. We have another level here. We have another level here. And these zones would act as a magnet for price to be pulled towards. So you would be looking at these levels for price to be attracted to. And this is basically your framework. This is your major overview. So let's go down to the daily. So our next step on the daily time frame is to identify the operating range. So here we have a swing low, and here we have our swing high. So this area here is our operating range. So what helped me identify these as my swings, especially this one, since it looks a little bit tricky? As you can see, one of the daily candles is lower than the other two. Both of these candles are way above this candle. That means there was a sharp turn. And if you can't see it on the daily time frame, you can always go on a 12-hour time frame and you can see it clearly. As you can see a clear peak formation. But what about the other swing? Well, the other swing is there is an engulf. So these two red candles are way greater than that last green candle. That means price is turning. And you can, again, go on the lower time frames and you can see a clear change of character. So now that you have your range, your next objective is to find the range extremes. So your premium and discount. How do you find that? Using your fib. Plot your fib on the swing, and here you have your levels. What is the settings of the fib? Is 0, 25, 50, 75, 100. And if that's too complicated and you can't apply that for some reason, you can always do this. You can draw a box. Now what you do, you split the box in half. Now that you split the box in half, split each of these halves in another half. And now you have your levels. This would be your premium, and this would be your discount. Now let's mark up our premium and discount levels. Here we have our discount. And here we have our premium. So these are our extreme levels of this range. So the next thing to look at is buy and sell models. What is a buy and sell model? Buy and sell models are a reflection of price distribution. So here you had price accumulating. This is where the orders came in. Price manipulated right here and distributed. And as price distributed, it finished the distribution where? Underneath the initial accumulation. As you can see here, price accumulated, manipulated, and then as it distributed, it finished the distribution below our initial accumulation, which means liquidity absorbed. And same thing goes for buy model. Price accumulated, went down for manipulation, and now as you can see the distribution right here finished above the initial accumulation. Liquidity would be right here. Price finished off above the initial accumulation. And this is a way price is delivered. So what are you waiting for next? So now you want to go on the 1 hour time frame. And what you'd want to see is you'd want to see a buy model, which would happen here, or a sell model, which will happen right here, happen after approaching the ranges extreme. So let's say Price came up here. You want to see price here, then react from this level, then start a sell model. Or you'd want to see price get down here, react off this level, and then start a buy model. And where would you confirm if it's a buy or a sell model, and if it's actually true after you see the initial accumulation breaking down? Once the initial accumulation gets formed, after approaching our price extremes, after the first level breaks, you take advantage of the second accumulation. And as you can see here, once price reacted from our daily range extreme, the sell model started. So what happened here? Price reacted from this level and the sell model started, and this was the first accumulation. And once this accumulation is broken, you can start looking for your entries. You can look for a hidden block right here. You could have had an entry here, or you could always look for a premium rejection, which is right here, and you had your rejection right here, or you can have a secondhand rejection from inside of the range. So that's when, after you figure out your levels and you see the first step of the sell model broken, that's when you know that the order flow is in your favor. Why? Because now you have the daily, which is your macro, and now you have the sell model right here, which is your micro, in line. Both time frames are in line. So that's when you go on a 15-minute time frame, and you can use any of the entries that I taught in my previous videos, which are right here, to enter the trade. And as you can see here, price finished below the initial accumulation or at the initial accumulation. All right, hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and see you in the next video.